The new year has just begun for cryptocurrencies, and some are calling for a 14% rally for cryptocurrencies, meaning a 14x from our current levels by the end of this year, and they are also calling for a 70% plunge or a move to the down. Before we hit these big price targets in this video, we are going to be going over the entire crypto market, what's happening, because there are some very big and important things happening on the RSI, on the charts that you need to see, especially if you're holding Dogecoin, Shiba Inu, Bitcoin, any cryptocurrency. Now, before we get into the video, please consider giving this video a thumbs up and make sure you stick around it to the very end. So here is the thing. The boldest Bitcoin calls for 2023 are out, and a 14% rally or a 70% plunge may be on the card. So Bitcoin, which is the slowest moving cryptocurrency every cryptocurrency follows, Bitcoin fell over 60% last year, and there were many things that caused this, and the primary thing that caused cryptocurrencies to crash, and you must understand this, is that the financial markets had crashed significantly as well. Cryptocurrencies are part of the traditional markets, the traditional financial markets, which are the stock market and the futures markets. The stock market had crashed significantly because the Fed had raised rates, and they've been raising rates, and they plan on raising rates for a long time, or specifically until they can get inflation down to their 2% target, which right now is sitting between 6 and 7% according to CPI. Now the real inflation numbers are probably 2 to 3x those numbers, and those numbers are actually inaccurate. However, although those numbers are inaccurate for a CPI, it does show us some portions of inflation coming down. And according to CPI, in certain data sets that show inflation coming down, the Fed is going to make their decisions that will either pump the markets or crash the markets, based off the CPI and PMI, which are two ways to measure inflation. Now, why does it crash the market? Well, when you raise interest rates, people effectively have less money to put into the markets, and money with banks and other things and with people becomes very, very tight. So they have to tighten spending. They have to tighten spending to bring the inflation down, which is not a very good thing to do right now. I don't think that they personally are using their tool of combating inflation correctly, and let me know your thoughts about that in the comments below. However, they're doing it, and there's nothing that we can do about it at this moment. But eventually they are going to stop raising rates, and when they cut rates or when they stop raising rates, that pumps the stock market. When you cut the rates of interest rates, the markets go up because people have more money. People are spending more money, and essentially more money can be put into stocks and investments. And that's how cryptos can go up. That's how stocks can go up. But when people don't have money to invest, cryptos can't go up, stocks can't go up. But they will. More money will flow into the markets. So basically by raising rates, it kills the market, and when you cut rates or stop raising rates, it pumps the market. This has been going on for a very, very long time in this country. Also, you must understand that the entire crypto market in the stock market was going down the entire year last year. And bear markets are typically only 1 year long. We've already surpassed 1 year in a bear market, and typically if you watch my video yesterday and last night, I show you in great detail that bear markets only last 1 year. Historically, it's been 100% accurate for Bitcoin cryptocurrencies, so we are getting very close, very near to the bottom, and the Fed is most likely going to cut rates this year. The Fed is likely to pivot very, very soon, over the next couple of months, and this is what is going to bring the crypto market up, potentially a 14x from here, and we're talking about Bitcoin. So if Bitcoin is doing a 14x, that means all coins will do much greater than that 14x. Now, let me share with you what is happening on the charts right now. Something very interesting. I wanted to show with you exactly specifically for Dogecoin. What we can see is this massive bullish diversion on the RSI. We have the price showing Dogecoin coming down strongly, a very strong downtrend. But on the RSI, here we are seeing a bottom and a move to the upside that is showing that we are about to potentially enter a reversal, that Dogecoin might be getting near a bottom. We can also see it from these points here compared to the price action from the top here. So a lot of bullish divergences are taking place on macro scales. For Bitcoin, for Dogecoin, for Shiba Inu. And these are huge indications that we are at a bottom or we are very, very close. Now this week, we're going to begin to see a lot of volatility because we have the Fed meeting Wednesday. They're going to be releasing their minutes. We have CPI coming next week. The volatility is going to be flowing into the crypto markets very soon, as we've seen cryptocurrencies sit sideways for nearly a month's time. But this consolidation period where cryptos are just sitting sideways is over, and what we can see is that cryptocurrencies, most charges are double bottoming. We are seeing that we have very strong support here, a lot of demand here, and that the prices are having great difficulty breaking the support, which means that there are more buyers in this area to push the price up most likely. That is my opinion. That's what I think is happening. I do think cryptocurrencies have bottomed from here. There is a possibility we get to go down. We can move down from here, we can crash down from here. It's certainly a strong possibility because we are still very bearish. We are in the bear market nonetheless, so understand this. But the charts are indicating that there is a possible bottom, that we are getting very close to the bottom, and that's the most important thing. Whether we crash down a little bit further, we go down further, we crash more, we are still very close to a recovery, then from going up from here. That's gonna be it for this video. Thank you so much for sticking around to the end. Please consider giving this video a thumbs up, subscribing to notifications on. I will see you later.